hear the word as a service. So many companies throw that out, something as a service. Is that just a buzzword?
At the core, it's a different business model. At the heart of it, there is this contract with a service level agreement that ties the two parties for a specific solution. The solution allows the customer to manage the infrastructure and secure a specific business outcome under certain performance conditions. We manage the infrastructure on your behalf. We grow and expand that infrastructure as your need grow and expand in turn. And so the degree of customer intimacy is a quantum leap above the transactional world.
With a different business model comes a different metric for measuring success. Annualized run rate, or ARR, has become the focus for Tarek Robbiati and his finance team.
The ARR is critically important. The ARR is actually measuring the amount of our revenue that is locked in and recurring with our customer base. And to the extent that our ARR is growing fast, the more robust the future of the company is. And on GreenLake, we have to grow customers, we have to grow the revenue we make from those customers, and the ARR is the annualized run rate of revenue that you have from one period to the next. If your offer has a perennial future, it translates into a growing ARR. This is the way for us to truly understand that we remain relevant for our customers over the long term.
What about margins? When you hear from some of these analysts, these investors here, they're still dialed in on gross margin, some of the more traditional metrics?
Gross margin, for me, is the most important metric in our sector, right? It's fundamentally, if you think about our business, which comes from a hardware heritage, moving into as a service, and with hardware commoditizing, you have to have a focus on gross margins. And as you can see from our results over the past 9, 10 quarters, our gross margin have been expanding very, very solidly. That actually tells you that your customers are willing to pay a premium for what you have to offer. And so what you want to see is a combination of ARR with gross margin expansion, and the ARR composition becoming richer and richer with more differentiation thanks to software. That's the journey that we're on.